Today, I want to talk about how leaked data shows that short sellers are finally giving up. I want to explain why these shorts are giving up, how they're trying to hide it, but how Adam Aron is super confident that AMC will soon squeeze. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, this article says that stock market short sellers that helped fuel this year's rally are finally giving up. It says that bulls outnumber the bears by a big margin in its reversal from 2022. It starts by saying a worrisome thought for the stock faithful. You won't have the bears to kick around anymore. It says fresh off the strongest first half for the S&P 500 in 5 years, the rooting out of unbelievers has shown signs of picking up speed. And it says that short sellers who came into 2023 preparing to feast have been backing away from positions as stocks rally. Shifting sentiment can be seen in data, showing bearish positions in ETFs slip to 3-year lows, while shorts in the S&P 500 futures were unwound at the fastest pace since 2020. And now the strength of the market rebound is putting pressure on bears, leaving the market with one fewer accelerant as concern about the Federal Reserve's war on inflation reasserts itself at a time when corporate earnings are forecast to drop for a third straight quarter. This article reports that short sellers likely lost $37 billion in June alone, according to an estimate by analytics provider Ortex. And they've said that losses have been piling up for bears all year. Many of these hedge funds have been busy unwinding or closing out of their short positions in the previous 4 weeks. And many of their short positions or their put positions fell by 226,000 contracts. What this article is basically suggesting is that short sellers are currently being squeezed in the wider market, and they're being squeezed so hard that they're unwinding their bearish bets, aka unwinding their short positions at a record rate. As I've explained in the past, these short sellers are going to first focus on unwinding their short positions in major tech stocks to protect their more risky investments. After those are all unwound, they'll then unwind their short positions in high growth stocks, maybe for example Carvana, Coinbase, and many others, before finally unwinding short positions in smaller meme stocks, and then as a last resort, closing out of those shorts in the main meme stocks, AMC, GameStop, and in Ape. Because obviously they can close out of shorts in major tech stocks with only a few $1 million or a few $100 million in losses. But obviously closing out shorts in AMC and GameStop would cause hundreds of billions of dollars in losses across the entire hedge fund industry. Therefore, they close out of the smaller risk, less damaging short positions first, saving the higher risk, most damaging short positions for that very end. But what we are seeing is short sellers being squeezed in the wider market as a whole and being forced to close out of short positions, so far in the market as a whole, but soon enough in meme stocks as well. And the reason why short sellers are currently scared is not only because they're being squeezed in the wider market, but also because senators are finally wising up to exactly what's happening with AMC and GameStop. Chris Rose tweeted saying, how can AMC be at 100% utilization for 16 months with endless failed to delivers, and yet the hedge funds are able to somehow still find unlimited shares to short? Obviously, you and I know that answer and have known that answer for a long time, but I'm glad that senators and those in charge or those at the Fed are finally figuring out exactly what's happening and exactly how Wall Street has been manipulating not just AMC and GameStop, but effectively you and I as well. And even though Adam Aron is very confident about the squeeze, I want to quickly explain why there's going to be very few warning signs before the squeeze actually happens. This post says, remember, they didn't warn you before the 2008 market crash. They didn't warn you before Enron went bankrupt. They didn't warn you before Toys R Us went bankrupt as well. And they didn't warn you before Sears went bankrupt too. They didn't warn you before Madoff ripped off people through his Ponzi scheme. And they don't have your best interests in mind. They never have and they never will. And he said the only time they care about your money is when it affects their money. And therefore, if they're trying to warn you, it's not about protecting your money, it's about protecting their own. This is why we've had tons and tons of warning signs telling us or begging us to sell our AMC and Ape shares, but why we never received warning signs from the Fed, from the government, or from anyone about the 2008 market crash. No one was told on the news, or anywhere for that matter, about the impending mortgage meltdown. But all of a sudden, when AMC is supposedly gonna crash, they want us to get out soon and to sell our shares. And that's likely because they're trying to warn you not about your money, but about their money being at risk. Also guys, you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward, which you could always use to buy more shares of AMC, GameStop or Ape with Moomoo. All you have to do is sign up to Moomoo using the link in the description below and make a required qualifying deposit. If you just want that $100 cash reward and 5 free stocks, all you need to do is make a temporary deposit of $100. If you want more free stocks and those guaranteed shares, just make the required qualifying deposit. Signing up to Moomoo is obviously free and just requires a temporary deposit and is a really great way to support me and to support the channel. And that is why Adam Aron seems to be getting overly confident about the coming AMC squeeze, even addressing the rumours of a potential merger or partnership between Elon Musk, Ryan Cohen and himself, Adam Aron. So Adam replied to one of his own tweets without prompt saying, "I read my Twitter feeds to better understand what you think, both the good and the bad. Some of you have noticed AMC also stands for Aron, Musk and Cohen. And interestingly, the Taylor Swift's ERA's tour decodes to Elon, Ryan and Adam. He said the odds of those 6 initials are 1 in 8.6 million. Crazy, huh?" Not only has he asked a rhetorical question on something completely unrelated to a potential partnership between him, Elon Musk and Ryan Cohen, but he's even followed that up with a second response as well. Somebody else replied saying, "Just add an I into those 6 letters and you have America. What do you think this means?" Adam replied again saying, "What an amazing observation. You can't make this stuff up. The odds in that are 1 in 224 million. Now, I don't know if these numbers actually mean anything, but I find it very unusual that Adam Aron is completely and randomly addressing a potential merger or partnership between him, Elon Musk, and Ryan Cohen. It's not as if he replied to a specific question asking him about a potential partnership. He replied to his own tweet about Taylor Swift, which has no relevancy whatsoever. He just wanted to specifically put this point out there. So clearly, Adam Aron maybe does have a potential partnership or a potential merger in the works with Ryan Cohen and Elon Musk, and he seems to be very overconfident about the squeeze. So confident so that he's willing to talk about anything whatsoever. And obviously, as you'd expect, the shills and those short sellers had an absolute panic and an absolute freak out pretty much instantaneously. Mark Cole is obviously followed up by saying Adam Aron is not right in the head and suffers from delusion of grandeur. He said he's done nothing in life and has been a tool for private equity for decades. Not only has Mark Codes even answered or responded to Adam Aron's tweet, he's just simply gone off attacking Adam Aron as a person and attacking his character. Clearly the shorts and shills are having a major freak out with what Adam Aron has just tweeted and his potential upcoming partnership. Now on top of that, Leading Report has also tweeted saying breaking news. House Republicans are to launch an investigation into BlackRock and Vanguard. I think this really ties in well to the short sellers finally giving up and to these shills and short sellers having an absolute freak out. It says the investigation is for an antitrust and anti-competitive nature regarding their ESG policies. Again, I don't really have too much information about this investigation just yet, as they're only starting to launch or have been rumoured to launch this investigation. But obviously, as usual, I'll keep you updated if there's any more developments in this Republican investigation into BlackRock and Vanguard and any crimes they've committed. But finally, I also wanted to talk about this tweet from Travis, which is a great way to know if AMC is finally squeezing. He tweeted saying, "I'm creating the 8 to 9 0 rule on AMC. Which means in order for AMC to move ridiculously, you need either 8 or 9 zeros of volume." He said if there's 200 million shares of AMC traded in one singular day, which is 8 zeros, you're going to see a big move. And obviously, if there's 1 billion shares of volume traded of AMC in one singular day, which is 9 zeros, you're in the mother of all short squeeze territory. He said if we have 200 million shares traded in a single day, and don't forget all these numbers are pre-split, you can expect a $5 pre-split movement, which potentially means that with just 20 million shares traded post-split, we could see a $50 movement. With 400 million shares traded, you'd likely see a $10 movement, and with a billion shares traded, you'd likely see a $30 share price movement in one singular day. Now, obviously, a $30 movement isn't a squeeze on its own, but a $30 movement from the current share price could absolutely start the short squeeze and trigger it off. And obviously, finally starting that short squeeze could indeed end in the mother of all short squeezes. So he's based these calculations on historic volume, like the volume we saw back in June of 2021. Obviously, back in June of 2021, we saw upwards of 600 million shares traded in a single day. We didn't even see a billion shares traded, but the stock still ran from 801 up to over $70 per share. Obviously, the reason why we haven't seen any of these major moves in the last few months is because we haven't seen that trading volume. But obviously, when the shorts finally start to crack and we see more and more shares of AMC traded and less AMC FTDs because the shares are actually settling through, that's when I think the mother of all short squeezes will finally be getting started. So guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.